Hi, everyone. Welcome to our second webinar. We are going to be around for a couple of minutes to wait for everybody to join, and then we'll start. So I'm checking out, and we have 14 participants, and it's rising. Thank you, everyone, for joining. So basically, today we are going to talk about digital assets, cryptocurrencies, stablecoins, and how they are changing the paradigm in cross-border payments. Basically, I'm Kazım from Arf. I'm one of the co-founders of Arf. And Arf is a startup focusing to solve the cross-border payments problem all around the world. So today we are with Faisal Khan, a cross-border payments consultant and veteran in the industry. So thank you for joining, Faisal, today.
Thank you for inviting me. Happy to be here.
So today we are going to actually ask hard questions to Faisal about how stablecoins and digital assets are transforming cross-border payments, what are the benefits, how we are going to see impacts on various institutions in the industry. So starting with the basic questions, Faisal, what do you think about the growth of stablecoins and digital assets and their effects on the payment industry in terms of competition, adoption? What do you think? What are the most important outcomes?
So definitely they're growing and they're increasing day by day. I think if you look back 3 or 4 years pre-pandemic, maybe a year before the pandemic, they were purely speculative assets. They still are in many ways, but the use of stable coins for purposes of settling payments, for making cross-border payments instantly. I mean, the classical example was this past weekend of Easter, where banks were closed on Friday and Good Monday, and for 4 days, no payments were being done. And stable coins were, they were working 24/7. So a lot of people have started using them. The biggest question is, there's a huge question mark on the accountability and auditability of these assets, particularly if you're holding large positions. But institutions like Circle and others are now opening their books to auditors and to financial regulators to show that we really are backed by the appropriate assets, and we're not just minting money like the Fed does. For stablecoins, the game is getting stronger and stronger. The two emerging threats that they will face is definitely going to be from CBDC when they come out, and we'll talk about that in a bit. And as far as other regular cryptocurrencies are concerned for payments, I haven't seen that traction yet. I mean, fine, people will pay for an Ethereum, using Ethereum or using XRP or using BUS, BNB, etc. But I believe the market is very low. Vendors and merchants still prefer their payments with, a stable coin because it's easy. There are many companies out there that are now enabling vendors to go, especially in high-risk areas where acquiring services were not available. Gambling is one, the logo design industry, software services industry, web hosting industry. It's very difficult to get merchant services because of fraud back, etc. So cryptocurrency is a really, really good tool to be able to accept. And again, we see a lot of people saying, okay, fine, I'll accept Ethereum, I'll accept Doge, I'll accept Bitcoin, I'll accept whatever, barring the gas fees equation. And then immediately convert it to, a stable coin. So stable coins, I think, have announced themselves that they're here to stay. How they will be maintained going forward is obviously a question open to discussion.
So basically, between cryptocurrencies and stablecoins, there is this two big questions to be implemented or adopted in the industry, right? So compliance is one aspect and volatility is other one. Which one do you think is a bigger problem?
Compliance is a bigger aspect. For stablecoin, volatility really doesn't come into the equation over there. For non-backed coins, yes, it's a huge issue, but I don't see institutions going into non-backed coins for purposes of payments. You take an example of what has been crazy on Twitter, which is Elon Musk. And, for example, if Elon Musk says Doge will be accepted for payments of car payments, Tesla payments, for example. So I don't think so they'll accept Doge and just keep Doge. I think they'll accept it then immediately for purposes of compliance and audit, etc., and best practices of accounting. They will convert it into the US dollar as soon as they can. But I think compliance and regulatory coverage, licensure is going to be a huge, huge issue. And I don't think we are going to get that kind of a time frame to grandfather the old coins in. I think the regulators are going to be pushing that you get compliant and get compliant very quickly.
So one question, as said, there are certain stable coins that are more suitable for these type of purposes, like Circle is announcing they are testing this and they are saying that they are completely liquid backed. So how do you see CBDCs and stable coins competing there? You just gave an example to CBDCs. Do you think we are going to see CBDCs popping up and getting traction and going over these stable coins, especially USDC, for example?
So there's a lot of talk that's happening in the circles that at least I move in, that CBDCs, CBDCs are going to come out. Invariably they will happen. But the banking circle, the financial services industry says, it depends what sort of regulatory compliance they will have to adhere to. And if the private issued stable coins have a more higher velocity of money and are easy to move, easy to get, easy to exchange, etc., versus CBDCs, which may have certain restrictions, then I think the private issuance of stablecoin will have a much market share. And that's certainly the argument right now. If you look at the talks given by various issuers at the House Financial Services Committee in the US, they have said that they feel that the ability to use private private issued stablecoins versus CBDCs will probably have a more higher velocity of money than the CBDCs. The CBDCs can be used greatly for many other government payments, but I think in the private sector, the stablecoins will have much. There's a question someone asked is, why do you say volatility is not an issue? For example, need to buy USD to USDC. There's not volatility in USDC, but the impact is felt due to fiat fluctuations. Fiat fluctuations is there. Right now, for example, if you are buying a USDC, if you're obviously converting from a currency, yes, that fluctuation will always be there. That's how the FX market operates as it is. But once you are in the USD domain, once you're in let's say the Federal Reserve domain of the United States dollar, the fiat-backed dollar, and then you get a corresponding coin, which is the backed dollar coin, I think the cost of getting it is going to be next to zero, because I think everyone is going to be competing on it. And
no, for sure. So let's, for clarification, let's say that we are using USD rails mainly for settlement between financial institutions, let's say, and especially for USDT, yes, there is a certain amount of volatility, but especially for USDC, we are just seeing a tokenization and redemption operation, right? One-to-one.
Yeah, so I think it's very important to understand that the USDC rails that we see, the USD rails that we see right now versus in USDC is not going to be the only sheriff in town, if you will. There are going to be many ultimately there are going to be many players, and I think there's going to be very good cross-sectional issuance on multiple chains. So you rather than wrapping it up and putting it out here into different L1s, I think the issuers themselves are going to go into and say, okay, listen, we're going to give it out on and do mint it on various chains such that they can be used in the best approach. Will the USDC dominate? That's a question that many people are asking, and I think it's fair to say if you're following the markets right now and the multiple players coming out, I think they're going to go. But I have to say that first we have to stop and ask, what is the United States government's paper that's going to come out on crypto or stable coins.
Yes, which we will definitely go over about Biden's executive order and
sure. We'll answer that. But pending, assuming that doesn't cause a problem, I think there's going to be plenty of choices, and I think not just on the rails themselves and issuance and holding it, but I feel that there are going to be certain coins that are going to be doing certain things best because of the organizations that are minting those coins. So, for example, if I come out today and I decide to do USD stable coin for the shipping industry and it catches on, then it's very difficult for someone else to come in and try to break that legroom because I already have an inroad into the shipping. So it might become the de facto coin or for settlement as a USD in the shipping industry. It may be the same
for sure.
The remittance industry.
Yeah. And there is this broader discussion, right? If we are going to see a stablecoin FX product, for example, let's say BUSD or USDC on one end and Singapore dollars, Hong Kong dollars, Japanese yen on the other. So where will the liquidity go? So if a certain type of dollar-backed stablecoin just pushes for liquidity for certain pairs, probably that's going to be adopted on these corridors, right? So there is going to be the liquidity side too.
I think the liquidity issue is very interesting because I think for liquidity purposes, you'll see many institutions that will come in today and try to provide on-demand liquidity. I mean, obviously, Ripple is trying to do that with, their ODL, etc. I'm not a huge fan of that. I don't see why I need to convert it to some arbitrary coin just to pair it up to get the other thing, because the trade right now is done dollar to British pound or euro to whatever. Yeah, for some exotic currency, I may need Ripple to do a cross pair, but then cross pairs can always be done with other currencies. But I feel that liquidity providers, you will see a lot of money that is currently parked in US dollars. And when that money, for example, sovereign funds are parking money, companies have excess dollars parked in their accounts. And when you see that money being converted to digital dollars, especially stable coins for weekend, overnight, DeFi investment purposes, etc., I feel that the liquidity problem is going to be solved a lot. And there's definitely going to be a huge play for very specific corridors for on-ramping and off-ramping and being a liquidity provider in that area. And it's
perfect.
Just starting to come out.
Exactly. So we are right now, I don't know, probably you are going to agree with this, but currently we are seeing a pretty monolithic world where we see major, stable coins, USD-backed stable coins, but we are going to see prioritization, specialization in certain amounts, like your freight USD coin example. So we are going to see a lot of developments there when the time comes, as far as I understand.
Yeah. So there's a question, someone is asking, how much is an issue for on-ramp and off-ramp of fiat? The person lives in Nigeria, and I don't know how I can get to crypto without the 2% fee. Do stable coins solve this? No, they don't solve it, unfortunately. Stablecoin just happens to be a digital rail of it. What the problem is the let's say the disproportionate requirement for incoming demand for dollars versus the outgoing dollars. Nigeria is a net outperforming economy. That means the amount of dollars it receives, it has a current account deficit. So it's mostly a buying economy. It's buying more. And that's why the premium exists in the local market. So you will never get rid of it. In fact, that premium might go up. The only way it can go down is by having local miners, etc. But then again, the cost of energy is so high over there that no matter what you try, that arbitrage opportunity will always remain there. And this is how the FX markets work. If everything was absolutely stable, it wouldn't be there. If enough people get into the market, then it may solve it, but I don't see that happening immediately anytime soon, at least not for Nigeria. Nigeria is a huge market in that thing.
Yeah, and especially involving financial institutions or money service businesses and using stablecoins on the cross-border side. Well, these institutions have, two sides, right? The first side operating with the local, with the fiat rails, And there is this cross-border side, especially where stablecoins can be used to remove a lot of friction and enhance the settlements between these institutions. So starting with the growth of these digital assets and stablecoins, I want to ask you specifically about what you think about B2B lending of digital assets. Do you see any advantages, opportunities, especially for MSPs there? Do you think it's going to positively affect the cross-border payment industry? What is your view on this?
We're asking a lot of things in that question. So let me just break it down simply on the MSP question. I really can't, I'm not an expert on B2B lending, but I can give you an educated guess when it comes to money services business and lending. So in the money services business, I think we are coming on a crunch where the cost of transaction is being pressured to go down, 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 down. The major routes, the major correspondent corridors are already experiencing this. For example, if you look at the Saudi Arabia or UAE to India corridor, the margins are very, very slim. If you look at USA to Mexico, the margins are slim. It's almost as if you need a cartel just to maintain the price, because otherwise the price will go really down. But there are, like, if you look at intra-Africa, there are 58 countries over there, 54 countries over there, and that are needing to trade. So over there, the cross-border is really good. So over there, lending may come in because for purposes of pre-funding. So you will have on-demand liquidity providers who will lend the money, do the trade, take the money back, because they can more efficiently move it around at 24/7 anywhere they want it, where there is a demand, and they'll make it. So they will be basically say, okay, I'm going to be an LP for you, a liquidity pool or liquidity provider, or even provide from a liquidity pool, and I'll charge, I don't know, 30, 40, 15, 20, 30 basis points for it, just to be able to provide you liquidity against, like, the Ghana cedis versus, and the Nigerian, Naira and so forth. So yes, those people are going to be there, and they will need to lend someone. MSPs can come out and go into very specific corridors and lend against very, very little amount. So for example, if you're lending against 6% or 4% a year, so imagine what 4% a year means for 1 day of lending. It's, and then how much are you processing? Let's say someone wants to make $1,000 payment from USA into Ouagadougou, which is the capital of Burkina Faso, right? So now this guy is obviously not, an MSP is not pre-funding Ouagadougou. So they'll lend money, and then they'll put it over there, and then they'll say, okay, fine, give it. And the cost of that lending is going to be peanuts, a couple of pennies. So I think from a lending point of view, the LPs will come into play. I don't think so by law, MSPs would be required to have lended capital on their books, because it might show a risk of a position that they may not be able to cover later on.
Yeah, when we are looking at these problems, we see that, well, at Arf, full disclosure, we are really interested in, for example, something like a working capital loan, right? Because by using digital assets, you are able to credit a single transaction, right? So this might be a real technical opportunity when compared to the fiat rails or traditional lending mechanics, etc. Because these are digital assets, you are able to credit transactions, and it might open new horizons, new opportunities, and the lending times can be really, really low in that case.
I mean, it's important to understand, Kazım, that when we mention MSBs lending, we're not saying that they're going to be lending. It's just that the fact that the fund's good and settled model has a T1 or a T+2 or a T+3 to settle before you get the money. And what you want to do is you want to just fund that short period of time so that you don't have to pre-fund. So you're lending against it, against a confirmed order, so that you can pay out. Because once you get a confirmation that a US bank is going to give you an ACH settlement on Thursday, and today is Monday, you know that in 3 days you will be settled. But for that 3 days, you need to lend money so that you can do a payout. In that case, yes, of course, it's a very highly efficient mechanism and mechanics of park. I mean, the whole idea behind this is exactly what Ripple was based on. There are trillions of dollars parked in Nostro accounts worldwide, and this is where it is. And there's a question that says, why doesn't money remittance companies like Wise use stablecoin cross-border payments? Because they are using treasury-based systems. If their books are already everywhere in the world, they don't need to. So for example, and what does that mean? If I have a ledger in London, if I have a ledger in all the countries in Europe, if I have a ledger in Pakistan and India and Bangladesh and Ghana and Nigeria, Why would I need to use a stable coin? I already know my position. I already have historic data. Where I really would need stablecoin is the weekend when the money is not being moved. At night when an extraordinary event comes in and my averages don't match out and I need to match some books. That's where I would need to use stablecoin.
For sure. And
right
especially
now,
for...
but right now the governments are very reluctant to, I mean, they have to accept that stablecoin in order to be able to do so.
Yeah, and there is this historic perspective on this, right? We know the corresponding banking network, and we know why Wise shined, because they are netting, they have these partners in local regions, they have these treasuries in local currencies, and everybody can check out the financial statements of Wise and see that they are actually having a great FX exposure. So yes, they are working efficiently for consumers, but there is a price to pay. And FX exposure and pre-funding and locked funds in especially local currencies is the price for it. And compared to the profit numbers, please feel free to look at, these amounts are really, really high. So historically, Wise improved a lot of things that corresponding banking networks or these banks provide, especially on cross-border payments. And now we are going to see emerging new type of actors that are built on stablecoin rails and these technologies. And with the adoption of the regulators, we are going to see all kinds of new actors. Why is going to adopt stablecoins? Probably they should.
Most definitely. I mean, it's like saying, are we going to go from analog to digital? Of course. Right?
Yes.
Definitely going to go there. The question is, how do we do it? And I think this is the part where companies like yourselves have to play a very, very important role, because you have to answer all those difficult questions and then present the case and package it so that they can go to their regulator and say, look, we've addressed the risk. Look, we've addressed the licensure. We've addressed compliance. We've addressed AML concerns. We are making it more efficient for your benefit. By the way, you mentioned a comment which I sort of disagree with, that
go ahead, please.
Most of the Wise is in FX. They're in local FX in very, very, very few countries. They typically maintain a position in USD. Where they maintain a position in local FX, they actually borrow from the local bank against the dollar at that day, so that they don't have to pre-fund over there. But most of their fundings are held in the dollar or the pound or euro, whatever.
But the numbers they are announcing really, really, Faisal, you see the pain there. And we know that Wise has a magnificent and very big financial operations team to make everything work globally. And especially
but yet this on so they know the traffic that they get on every Easter, yet they stop. Do you know, I mean, I actually did transactions on Wise. So I did a transaction on Wednesday. This
on purpose,
just to see if it would, because Wise typically settles into Turkey from EU into Turkey immediately, maybe in 3 hours or 2 hours, whatever. Yes. But I did it on Wednesday. No Wednesday, no Thursday. Friday was off. Saturday, Sunday was off. Monday was off. Tuesday evening, the money got credited. So yes, there are issues. And this is where, the person who asked, well, Wise use stable coins for cross-border payments? I think they have to. If they won't, someone else will use it. Case in point, maybe MoneyGram. I think they would be contenders. If not, someone else will come in and say, you know what? We are going to show to our regulator that for one corridor specific, we will use it and we'll make it better. Imagine if the government of Sri Lanka, which is now facing an FX crisis, says, you know what, we will accept the USDC, the USDT, because we want money to come in ASAP. And they just need to prove one corridor. And if it works, you'll see a cookie cutter approach and everyone else be copying the same thing. Yeah,
perfect. Following up with the Wise example, actually, do you think we are going to see new types of treasury products, especially tuned for MSPs or cross-border payment companies? Because this is a thing, right? There are multiple chains that you can work with stable coins. Again, at Arf, we are coming up with these solutions. But in the end, we believe that these treasury accounts or treasury services that are built on top of digital assets will be very visible and very common to be adopted by MSPs. What do you think on that?
I think it's a problem that has not been addressed till today. It still is a huge problem. Having multi-chain rollouts, having having multiple stable coins on multiple chains and managing it, and being able to do swaps, being able to look at the very expensive gas prices at certain times, being able to manage the risk and the exposure you have to the counterparty at each point in time. These are products that are still being made. And I think this is where the analytics, the understanding of data intelligence vis-a-vis your actual settlements, and at the end of the day, book positions, etc., and which is heavy, which is lighter, how can you level it out, how can you bring the money back home, or how do you put that money that is not being utilized into an overnight fund for 8%, 12%, and get it out the next day.
Now you are doing the next step, right?
But
having a strategy.
But these things are invariably happening. I know a lot of companies who are now starting to invest and look into this, but we come back to the same problem, and it's going to be regulation and licensing. That's what, from a theoretical point of view, if you want to build it as a coder, you can build this. As a company, you can't run it. You will not be allowed to run it. So that's the problem. But there's plenty of opportunity over here. And I think people should really, really start looking at cross-chain compatibility, CeFi to DeFi world, DeFi to CeFi world.
In your experience, when we are looking at, for example, the regulation in Switzerland and how we are able to help MSPs from there, we see that there are certain types of definitions or relaxations in the regulation that makes it possible to provide some services to MSPs, especially in terms of lending or high yields accounts. But again, this is uncharted territory for the most part of the world and for the most MSPs scattered all around the world. But is again, I think it's a problem that is going to be solved pretty soon, or we are going to see the regulation or the definitions pretty soon. And it's going to be, I believe, a huge space.
So, there is I have to be careful when I say there's a huge opportunity in the DeFi space for purposes of investments. So I think the next level of products is not payments. Payments is a de facto thing that is going to happen, right? I mean, but the next level are three things: investing, savings, and lending. Yes. If you build products into these arenas and plug into these services, investing, savings, and lending, and are able to do so across multiple chains, across multiple geographies, across multiple things, that's really cool. But you have to be very, very acutely aware. More money moves in, arbitrage opportunity goes down, percentages go down, risk may go up, the rug may be pulled, etc. So you have to really build products for these things. And there are certainly people trying to do it. It's such, how many chains are you going to build your product on? You need a very large team to do that, right? Are you going to build Solana and Ethereum and the BSC and, Polygon and, so.
Yeah, well, at least we are going to see consolidations in terms of EVM chains.
We haven't seen. We are in a very, very command line mode, if you will. So we have not seen the GUI equivalent.
Yeah, we are expecting the Mac, the first Mac that is going to come up.
No, we haven't even seen that. We are still in a very, very command line. Do you know how many people get their wallet address wrong? Millions. Do you know how many people lose their keys? Millions. So we are in a very, very, and then the whole hot storage, cold storage, etc. Blah, blah, blah. So we are very in the command line stages. We are not even web. We're not even crypto 1.0. Well, people like to say we are in crypto 3 or 2. What I still say we are crypto 1.0. Crypto 2.0, when the masses really start using their money and start parking it over here, you will see. We will see use cases we haven't even seen before, haven't even thought of yet.
For sure. I have one question about your because you both know the real people that are doing remittances, and you already know MSPs that are in the industry. So compared to the capabilities of the masses with the capabilities of the current MSPs, how do you think they will compare? Which one is more advanced or will be adopting these technologies quickly? Masses or?
No, I think the masses.
Okay, got it.
I'd love to say the MSPs. No.
They are chained to the regulation.
They are
Do you think this is going to be an obstacle?
so busy firefighting and doing their reports and their audits and so afraid of losing banking, even talking about crypto. And now with this risk-based approach that all banks are taking, they want you to, they want such detailed information on how you're doing a transaction. And if they see any mention of a high-risk country or a crypto or an exchange or a business that is related to the blockchain, your risk values go really high up, and they don't want to do business with you. So I think the masses are way more intelligent than the few MSBs that are out there.
For sure. Well, my take is I think there are going to be some MSPs, innovative ones especially, that are going to adopt these technologies, and they will actually to establish certain advantages against the companies that are actually competing, which are using traditional banking rails. And there is going to be some innovation done line inch by inch, line by line, and we are going to see the adoption.
Yeah, and like I said, this is an awareness and education issue. It's a issue where you have to experiment, and MSPs can't afford to experiment. They need companies like you that have actually made something that works, that they can plug in and say, okay, you know what? Okay, fine. Kazım has thought of all the questions. He has all the answers, and our compliance is going to go check it off. Our CEO is going to check it off. Our risk officer is going to check it off. Our bank partners are going to check it off. Our regulator is going to check it off, and then we can work. But if you ask them to go and do what you're doing, no, I don't see that level of innovation. So there's a question by Robert. Yeah, major challenges that most people don't understand the difference between crypto and blockchain. Absolutely. I think it's one of the absolute critical questions. Like, for example, when I give a talk on Bitcoin, one of the things I say is, if there's one thing you're going to learn today, is Bitcoin does not equal the blockchain. So because people think Bitcoin is the blockchain, Bitcoin runs on the blockchain, etc., but it's not there. And the second question by Fatima is, so while I agree,
AML and terrorism, again, counterterrorism financing, terrorism financing. So go ahead, please, and I will have my take.
On this question, the most beautiful thing about, for example, about the blockchain, let's talk about the blockchain for a second, is people thought that once you're on the blockchain, you're absolutely anonymous. And that's not the case, right? You're not even semi-anonymous. Now they have very detailed tool sets by chain analysis and other companies. Sure. They can really, really find out the source of the funds, how it's moving, how it's been split up, how it's been structured. So I think the anonymity factor is got to be thrown out. And I think what you have to understand, in the digital world, you leave a fingerprint, a very clean digital fingerprint, every time we do a transaction, every time we do something.
Which is going to be there forever.
Forever. And I think it's going to be maintained. And I think it's going to be now implemented and mandated into the law so that you maintain it and keep it. So I don't think so it's going to be a concern. I think they just bring out the boogeyman every time they don't understand something like that. And yes, they do that a lot. Yeah.
Well, and there are certain approaches, actually. For example, at Arf, we adopted that we are serving licensed MSPs, money service businesses only, and we are providing these settlement capabilities between licensed institutions by using stablecoins. And when we are doing that, we are also having the information flow going through us. And by facilitating this information flow, actually we are able to check sender information, beneficiary information, and implement all these transaction monitoring rules, etc. So it's possible to actually use stablecoins and digital assets between settlement of these licensed financial institutions and be compliant. So there are ways to do it, and a lot of companies are actually just
they're actually self-policing themselves. They're self-policing themselves. They're saying, we have to put these controls in until such time that the controls are mandated or to us by the regulator.
Exactly. Yeah. And on the subject of regulation, I just want I just want to ask you, what do you think about the Biden's latest executive order? And by that I mean forming committees to regulate, and what kind of regulatory improvements or additions do you expect from US particularly?
But the good thing is that there's a lot of regulators who are now gone into the private space or the private sector, and they are sitting against in front of the Senate and the House financial committees and all the other crypto committees and the dollar committees, etc. And they're trying to tell the United States government that we are going to be left behind if we don't catch up. The hegemony of the dollar will be lost. The power of the dollar will be lost. If you think that for the first time, Saudi Arabia is thinking of having an oil match to the won, the RMB, and Israel has started doing that, and so forth. So they need to convince the United States government that you have to balance the slider in such a way that it's not too much regulation, but not too little. The right one, and that's going to be, I think it's going to be a very interesting to see what the US comes up with, because remember, the United States was the chair of FATF when the FATF rules came out. They had made it their life mission in 2019 that before they leave the chair, they would get the FATF crypto rules out. They did that. Now the U.S. Department of Treasury, I think, or FinCEN is going to be, putting it out. We'll see how it is, and let's see. So there's a question, Ali Muhammad is asking, what about Novi? I think Novi is dead. I think Facebook could not have screwed up a project so badly, and then they tried it again, and then again screwed up so badly. So it's history. MoneyGram's remittance solution powered by Stellar. It'll be powered by Stellar, but it won't be powered by the XLM, if that's what you're thinking. They'll probably use it as a blockchain for ledger settlements, etc., but not.
And especially in MoneyGram's case, in this current implementation, if I'm not mistaken, is basically MoneyGram can be used for kind of ramp-on, ramp-offs for fiat conversions, crypto to fiat conversions. I don't see there is going to be adoption between
there's a question. Ripple and Stellar have tried to solve the cross-border payments, but there isn't adoption. Why have they failed? What must change? I think Ripple and Stellar, when they were trying to solve that problem, they were trying to insert a unit of currency that they had invented and said, this is the bridge currency that will bridge any two currencies, because we will have LPs on both ends, and you'll be able to match it. So we have Kazım dollars and XRP, and then we have XRP and Faisal dollars, and hence we'll be able to have Kazım and Faisal dollars link up. What they did not see was the rise and the dramatic rise of the stable coins. When the world is transacting in stable coins and it's the end result of stable coins and the USD, why do I need to go to the XRP? I don't need to do that. And then the whole process of taking that XRP and then selling it off and getting out the liquidity exchanges, it's just so much.
Faisal, you are 100% right. But on Stellar's case, for example, to their defense, they say that, okay, we created the perfect platform to launch stablecoins, right? So everybody can issue stablecoins, and they really encouraged it. So in the end, the problem that is faced is, okay, you have Kazım dollars and you have Faisal pesos, and there should be some kind of liquidity there to actually do the conversion on chain, which is a problem. So
who has to be licensed? Who has to be regulated? Who must possess
crypto savvy?
Crypto savvy and must be crypto approved.
For sure. So and there is this also. Well, yeah, there is this AML and there is this compliance aspect too. Yes, the protocols have a lot of things embedded in, but somebody has to implement all this. And there is final thing is. Yes, these are protocols and they are really well thought and well designed. However, there is a need for some party that is powering everything up, a treasury account, these automatic AML reporting, etc., and managing these funds, or maybe getting credit lines in it to remove friction.
And the thing is, Kazım, that a lot of people are going to do it the wrong way. It's like you want to build an office, right? You say, hey, I'm going to start a business, I'm going to start a company. You don't go make your own computer. You don't go get wood from the forest and make your own desk. You buy it, right? So they need to learn that they can't build all these AML systems from scratch. They cannot build all those treasury management systems from scratch. They need to understand that they will have to go out. And then you could be the best programmer in the world, doesn't matter, but you have to go out, find a specialist company and say, okay, I'm going to plug into your APIs, use them so that I can save time, use what is already out there as a library component and build on top of that.
Exactly. Yes. So we should see, I believe, the protocols of Stellar as the building blocks, the IPX or TCP IPs, the very preliminary building blocks that are introduced. So it is unfair to, well, blame, because there is going to be some companies, private sector, that is going to utilize them, form solutions that is going to serve the masses, or MSP companies, MSPs.
I think it's, so why did Stellar fail? I think the question is.
I don't see any failure.
Yeah, well, I don't. I get XRP is not the right approach, but Stellar provided APIs. No, I think the right word is traction. You need traction. You need the right traction of the right parties to come on board and say, listen, I'm going to actually throw my transactions on that blockchain and actually use it to settle. The problem was that by law, those parties were not allowed to use, they were allowed to use the technology infrastructure, but they weren't allowed to actually transport asset value onto it because it was a gray area, right? And they had a risk that, the compliance officers were not okay with it. And by the time they got it right, USDC came up and so many other things came up. So now the question is, look at the traction is always going to be your number one thing. You need to have, you can have the best car wash in the world. If people are not washing their cars with you, you're nothing. You can have the best restaurant in the world. If people are not eating there, it's nothing. So that's going to be there.
For sure. But to put everything in perspective, basically, Stellar never provide APIs. They provide protocols. So you have to implement these protocols and sign deals with the so-called anchors, the other MSPs that you are going to settle with. Yeah. So in the end, Ripple has another approach. XRP, volatile assets, compliance aspect, is a lot of problems. Still, basically provided the bare protocols. So in the end, what I think is there should be companies that are building on top of these things, that are creating treasury products, compliant treasury products, that can serve actual MSPs. So this is the phase we should search for these companies, and probably MSPs is going to build their tooling on top of it.
Everyone that I come across immediately wants to build the end app on the protocol itself, on the L1. Yep. And I said, no, hold on. Why don't you look at, if you were not to use Ripple or Stellar or any other L1, what would you, in the regular fiat world, what would you do? You'd probably go out there, get a treasury management software, get a TMS, a transaction management system, a transaction monitoring system, couple it together and run your thing. You don't go build them up. But no, I don't know why they're just hell-bent on focus that when we go onto these blockchains, we have to build everything from scratch. No, I think it's time we start looking at L2. You start looking at the apps, right? It's not just the TCP/IP layer, but look at the app layer. The web application layer is where you need to start focusing and say, okay, this is where we're going to do, because they're solving a very specific problem. You cannot and would not be having the bandwidth to solve all the problems in an
exactly. And this is going to be a part of this education and the competition.
I think learning. They will learn by trial and error that, and this is why a lot of projects will fail. I can name eSend, SendFriend, and Tranglo people I know very, very well, and others. And, are they using Ripple? No, they're not.
Yeah.
They say we sign deals, etc. You're moving traffic. No, I know a lot of people with Stellar. I know a lot of people with Solana. Maybe a few transactions. But mainstream, no, still not there. We're not there yet. I think we need the regulatory clarity, which is what Ripple has been saying for a long, long time. And I think they really are going to hammer that. Once we get that regulatory clarity, once we get the clarity from the United States, once we're sort of given time for it to propagate, maybe in a year or 2 years, I think then we'll really, really start seeing version 2 of.
Yes. And to add all these regulatory aspects, there should be companies, there should be solutions that are removing all these frictions. There should be credit lines, there should be ready-made transaction monitoring solution to cobble everything up and make it easier for MSPs to adopt. So we covered a lot of ground. Thank you for answering all these broad questions and providing us your perspective. Thank you very much, Faisal, for the pleasure of having you. So thanks again, and hopefully see you in another.
Thank you very much
webinar
for
too.
inviting me. Thank you for all the things. I wish you all the best on your journey, and we'll speak soon.
Thank you very much. All.
Bye-bye.
Cheers. Bye-bye.